Welcome to the Cannabis Equipment News Podcast.
Hi, I'm David Manti, and welcome to the Cannabis Equipment News Podcast. With me today is Narbé Alexandrian, founder and CEO of RIV Capital. Thank you very much for joining me today.
Thanks for having me. Really excited.
All right, before we get started, please make sure to like, share, and subscribe to the podcast. You could also help us out a lot by leaving the podcast a positive review on whatever platform you use. Finally, if you want to email the podcast, you can email me at david@cannabisequipmentnews.com. All right, Narbé, I wanted to get started by learning a little bit about how you got involved in the cannabis industry. How did it start?
I joined what RIV Capital used to be called Canopy Rivers. I joined that back in the summer of 2018. Prior to that, I've always had a good relationship with cannabis. Was from a professional perspective, was watching the industry for quite some time. A friend of mine who I bumped into at my wedding, actually, a year before, mentioned to me that he was moving away from the banking world into the cannabis world, told me that it's legitimizing, it's legalizing in Canada. You should really check it out. I was a bit hesitant at first. I had been to some shows in the past, and it wasn't very professionalized relative to where I came from, which is the technology venture capital world. But I took his word for it. In in winter of 2017, beginning of 2018, I went to a few conferences. I took his pass, went in there, and I noticed that there was quite a dramatic shift away from what cannabis looked like in 2015 to what it looked like in 2017, 2018, with legalization just around the corner, expected to be July, but ended up being October of 2018. So I thought about it. I did some research. I looked at growth rates. I looked at the US market, the Canadian market, European market, and thought, you know what, this might be just the once in a lifetime opportunity of joining a revolution where not only do I have a good relationship with the product and I have used it, understand it, and think that really highly of it from a recreational perspective, but there's a whole medical side, which quite frankly, as a consumer, you don't really see unless you have a medical reason to do so. So started getting into it a bit more from a business perspective, and just thought that this looked exactly like the tech industry. To give a bit of background, prior to joining the cannabis industry, I was in the largest technology VC fund in Canada, Venture Capital, where we invested anywhere from 500,000 to 100 million into companies. So just large, small to large checks. Technology companies, Shopify being the one that made the highest return. There's a number of them since that as well that have exited. So really, there's a lot of similarities between tech and cannabis in the sense that in the technology world, you don't know what the future looks like. You know the technologies you have now, but you're kind of extrapolating what technology looks like in 10, 20 years from now. In the cannabis world, is the same thing. You're coming into it, don't know what legalization looks like, don't know what federal legalization in the US or interstate commerce looks like, and you're making a bet on how that plays out. Either you're buying cultivation or you're buying ancillary or you're investing in this or investing in that. So I thought that there was a lot of similarities there, but the difference was not much competition in the cannabis side relative to what you saw on the technology side, which was decades and decades of capital and firms being developed that cater towards that industry. So thought it was a great opportunity to jump in and never regretted it since then.
What was it like after making that move from venture capital in the tech industry over to cannabis? You know, something that, like you said, was kind of pretty cutthroat in terms of competition to sort of a wide open market.
That's a great question. I mean, there wasn't much competition from the capital allocation perspective. There's a lot of angel investors, as in high net worth individuals in this industry, even today, where they made money maybe in another industry, or they made money in cannabis and they're recycling it into new companies, new brands, new firms, new technologies, new equipment manufacturers, etc. So that part still exists. There was no institutional type investor in the space that did private equity or venture capital work. So thought there's a huge opportunity there. The downside of it was when you're talking to entrepreneurs, and typically entrepreneurs in this industry, a large chunk of them come from just loving the product or cannabis itself, not necessarily coming from hey, I'm a scientist and I'm just checking out this product and getting into it. But they have a personal relationship to it. And for many, they lack the understanding of typical business terms. So for example, when in the technology industry, widespread, if you are a firm or a person putting in a large chunk of capital into the company, say, David, you have a brand new company and I put in $1 million into your company, and this is the first amount of money that you've seen large enough that can kind of shape the future of your company. There's some restrictions that are in place. For example, you can't go and raise capital right after me and cram me down. You can't go and sell the company without telling me ahead of time. You can't go pick up debt and have that sit over equity. Why? Because I only own a minority stake, and I want to make sure that you're not doing anything that screws me over. Mm-hmm. So these things are put into an agreement. On the cannabis side, these very standard terms, when you're presenting them to the founders or the operators of these companies, they would look at it as you're handcuffing me. You're not letting me do things. And it was a bit of an educating process just to say, we're all on the same team. We all want this company to grow. I just can't have you cramming me down or changing the capital structure on me without me knowing, because I'm the biggest check and I took the biggest risk here. So none of that was difficult to overcome, but it was a bit of an educating perspective within in investing, which I frankly hadn't seen the technology industry because everyone knew about it.
So how did you found RIV Capital?
So I actually came in as one of the first employees of RIV Capital. So RIV Capital was founded by two investment bankers who never took real operational control of the company. So they built this thing out within Cannabis growth, and then pushed it to become an independent, autonomous company. And then at that point in time, brought someone in to operate the company, which is me. Okay. So it's a bit of a technical term because we built the RIV Capital that you see today for the most part, but the original articles of incorporation and so forth weren't done through us. Our thinking was always that this is going to be a massive, once in a lifetime opportunity. If you look at the illicit markets, you can see how big the market would be. If you look to the polls, you can see how many Americans and Canadians and Europeans want cannabis legalization. So when you have the demand and you have the supply come together at the same time, there's no doubt this was going to be a huge industry. Question was, what role did you want to play in it? So we were taking a look at just the different perspectives. We broke down the value chain in 9 categories, 50 different subcategories to say, where do we think the puck is headed versus what everyone else is doing? And for a long period of time, all of our data kept going towards, we need to go to the US market. We were a bit handcuffed at first into going to the US market. We were on the Canadian exchange, the Toronto Stock Exchange. We had Cannabis Growth, who owned multi-voting shares into our company, and they controlled us. And they had Constellation above them as well. And we were a bit handcuffed in terms of being able to go to the US market. We couldn't do it. We couldn't touch the plant. So we made investments in ancillary side. And for 18 to 24 months, we were working day and night to find out either if there's a structure for us to get in, or if there was a way for us to shed Cannabis Growth and the restrictions that we had and go in ourselves. And each of those had their pluses and minuses, pros and cons to it. We found structures that worked. We were investors in TerrAscend flipped to the US. We still own those shares, but we had exchangeable shares. And then through Cannabis Growth, through all the management changes that were taking shape between Bruce and Mark, and then finally David, we had to figure that out as well. And every single time it was a bit of a re-educating process of, hey, this is what we're trying to do. Can you help us? But we weren't necessarily the top priority within their stack because they had a whole company and market share to figure out. So that took us quite some time. In December of 2020, we finally came to a deal that we could take to our shareholders. We sold 3 of our portfolio companies. There are interests in them too. Cannabis Growth, one of them being TerrAscend, for about 380 million Canadian at the time of close. We took a chunk of that, bought out Cannabis Growth, and said restrictions and handcuffs are off. We took a portion of that and retired a liability that we had inherited from our predecessors as well. And we're off to the races in the US, free and clear. The con was we didn't have this large corporate strategic behind us. Mm-hmm. The pro was we could go to the US and touch the plant all we wanted to. So in the meantime, we reintroduced ourselves to Scotts Miracle-Gro, the big fertilizer company. They had a division called Hawthorne, which has over $1 billion of run rate revenue in the cannabis space. And they invested, Hawthorne, a subsidiary of Scotts Miracle-Gro, the Hawthorne Collective invested $150 million US into us. And now we have $405 million of capital. Not much left on the venture capital side because we've liquidated most of it, but zoned in, focused in on the US market and hoping to announce something soon.
Speaking of announcing something soon, when you came out with I believe it was your Q3 results a couple of weeks ago, you had said in a statement that you're looking at a strategic shift to the US market. Could you elaborate a little bit more on that?
Yeah, so the venture capital model in a public entity just doesn't work. And it took us a while to really come to terms with that. And we tried different ways to try to create something that didn't really exist in any other industry. And the reason it doesn't exist is as follows. Like, as a venture capital investor, you're investing in minority stakes into early stage companies, helping them out, watching them scale, and ultimately getting to some sort of a monetization situation, which is they sell to another company or they go public. That can take 2, 3 years, 10 years even. I think the average time frame from founding to exit for a technology company in the US is about 9.2 years. So it just takes a long time for to get to that position. But as a public company, every quarter you have to go to the market and say, this is what I've done, this is what I've seen, this is what we're doing. And those two things don't align because one of them, the venture capital model requires some patience. The public company model requires results every quarter for shareholders. So we decided to pivot away from that. We decided to pivot and look at the US market to pivot to become an operator. So over the past year, we've looked at dozens of companies, single state operators, MSOs from a variety of different areas, California, Nevada, Arizona, all the way to New York, New Jersey, down to Florida. And we've looked at the regimes in the different states. We've rated them, graded them. We've looked at different players within the market right now from an MSO perspective, what mistakes they made. We know them very well as well. And we decided to take a different approach to it. We decided to take a more long-term consumer-centric approach, not necessarily focusing too much on the capital markets, but more so focusing on how is this industry going to blossom and develop within 10 years, 20 years from now. So when you look at it from that perspective, you look at the lens of what states you want to play in completely change. And so we're focused on announcing something very, very soon, which puts us in a great position and really helps us get to where we want to in that time frame. But at the same time, we were just very attracted to the limited license states because of the fact of being first in front of the consumer and being there before things open up.
Okay. So when you're rating and grading some of these operators, you like to see something that's maybe not in such a mature market?
Yes and no. I mean, if you're in California and you're building a brand and you're one of the top 10 brands, you're consistently in the top 10 BDSA or headset, that goes to show that not only have you, like, California is a very difficult place to compete in, a lot of competition. So if you show up at the top 10 every single time, you not only have the talent, but you have the expertise and you have the ability to create quality product that your consumers come to every single time. Not to say it's a guarantee that I can flip over to the East Coast market where you just don't really see any good brands that are out there, but it does go to show that out of all the products and thousands of SKUs that are in the California market, you've beat them all up and you've come to the top. So that's kind of what I put the unlimited license states. That's Washington or Colorado as well, or Oregon. On the East Coast, which is more limited license states, there you see a lot of hubris in the sense that there are companies out there that think that the limited license regime is going to stay forever. And I think that's a very myopic short-term view. There's no reason, there's no indication that competition will be concentrated to a few companies where you'll create an oligopoly. Governments don't want to create that themselves. So our perspective is the limited license regimes are there because as governments look to legalize the adult use market, ultimately, because they start with medical first, they want to make sure that they can control supply chain. They want to make sure that they know the ins and outs and how the illicit market plays through. Last thing they want is to create this huge legal framework and find out there's leakages from the illicit or into the illicit market. So for that, they take it slow. A few licenses at first, open it up, social equity awards, open it up, and then you're going to get into some sort of a, maybe not an unlimited license, but a high cap in terms of how many licenses you can have, similar to what you see in Canada. So that's our long-term view. So if you take that long-term view and you pull yourself back, you say, okay, well, if you're one of those first companies in those limited license markets, you get to actually show up in front of the consumer ahead of everyone else does. And you can really pump the marketing into those consumers to say, this is the product you should take home. It's quality product. You won't see anything like it. As new producers come in, that's the barrier of entry they have to cross, which is your brand within that market. And so instead of focusing on how can we pump out the most gross margin or EBITDA off of every single consumer, our focus is a bit different. Our focus is how can we be extremely consumer obsessed, provide the highest quality product at the greatest price that we can, and own that market into the future. And as we get through the scaling process, as we go through the experience curve of getting through those steps, that's a barrier that other people have to cross. And we can pretty much lower the price as time goes on, as we get better and better at this craft.
So how many, as you're betting on these companies, how many need to win in order to offset the ones that don't win?
So in the venture capital world, you typically need 1 out of every 10 to be a home run.
Okay.
You need probably 2 or 3 to be singles, as in you get your money back, or maybe you double your money. You need one of them to 10x it, and then that covers the rest of them. And the rest, and many of them in that world end up being what I call the walking dead, which means that they're not prospering, but they're not dead either. They're not bankrupt, but they're not growing at 100% rates year over year. So for those, you kind of take your foot off the gas and say, let it be. Go the certain path you want to go to. Opportunities to monetize and liquidate and get out of those positions, you would, but you don't want to do anything that harms the company anyway, and because of the reputation, ethics behind it as well. So that's typically the view. In the acquisition world and the M&A world, every single one of those has to work out. You're just betting way too much money on it, but you have full control as well, which is a nice thing to have relative to the venture capital world.
When you're working with these early investments in these young companies, how do you get emotionally attached, or do you try and kind of stay at a distance?
I mean, it's hard not to get emotionally attached to something that you have a thesis around and bet on. But that said, you have to really put your emotions to the side. Just like any professional athlete, when they look at the game, they try to put their emotions away and focus on their craft. You just don't want to have your emotions get the best of you. It really requires you. There's a lot of deals that you see that might make a lot of money, but you just don't agree with the ethos and the perspective of the people that are running the company. And there's some investors that just don't take that seriously and invest in it anyway, thinking you can change a person, you can change a style. You can't. Mm-hmm. So again, going back to the stat that takes 9.2 years to go from founding to exit in the technology world, that's not going to be much different in the cannabis world. So if you're investing in a company, you're going to be a minority shareholder within that company. They're going to be the ones controlling it ultimately. You have to be certain, confident, and excited for those group of operators to continue operating that company. And they have to be coachable and take your advice when they need to. And they have to push back when they need to as well, because not everything that an investor thinks is the way it goes. They're not the ones on the street. It's the operators that are on the street working their tails off to build this thing out. So you have to really buy into it. It is like a marriage. And another stat that I like to use is the average marriage in the US is about 10 years as well. So when you're investing in a company, it's similar to getting married to someone, because you're in it for that same average amount of time that you see. So you have to be really certain that that's the person for you.
Well, using the marriage analogy, when you're rating and grading these companies, is human capital the number one asset that you look at? Is it location? Is it footprints? Sort of, what are the top 5 attributes that you're looking at a possible acquisition target?
Well, I don't know the top 5, but I'd say probably the number 1 would be the license, just because it is a regulated industry. So what are you really playing into? It's very hard to get new licenses, as we know in this industry. There's a bit of arbitrage taking shape right now, where there's folks that are getting social equity licenses that and profiting off of that might not actually be those individuals candidates that will be for social equity licenses. So you have to, it's a bit of noise in the industry that I think should be cleared up by by regulation. That said, it's a highly regulated industry. So understanding what you're buying or what you're investing into is important. Close second is the team. Like, who is it that you're actually investing into? As an investor, as an acquirer, you're not the one typically running the company. It's the people, the feet on the street that are running it, and you're not their boss. You're a partner with them, and you have to really understand what that means. Which is, like, you're not there to tell them what to do with your money. You're there to work with them. What can we do? What introductions can we make? Do you want to talk to an analyst or a bank or a consultant or a competitor or anything? You tell us who you want to talk to. We have a deep Rolodex. We'll introduce you to whoever you want. That's a very important piece that an investor has to go in it with, instead of just trying to invest and sitting on the sidelines and trying to see if the company will succeed. If you don't bring that value, you're quickly going to be kicked out of the market. And then far down below that is the actual product itself. Why? Because if you have the right team in place, they can pivot the product to be what the consumer wants. So the product itself, especially on the early stage, isn't as important as it is the team and the way they've executed till that point in time.
Talking about the deep Rolodex and what you can do, what would you say are some of your strengths for a partner in terms of giving them the right connections? Is it, on the operational standpoint? Is it on the equipment standpoint? Is it on the retail side?
So that's a really exciting part with our strategic investment and partnership with Scotts Miracle-Gro and the Hawthorne Group. There is that they have deep connections into a lot of grows within North America. They've serviced them. They've provided product and parts to them. So they have a really good understanding of cultivation, extraction, manufacturing, processing, etc. Beyond that, on the softer side, whether it be recruiters or consultants or bankers or analysts, we have that all covered on the corporate side. So there's not much that we cannot provide from a value perspective. And our team, like, we're always ready to roll up our sleeves too and do the dirty work. I've always had this analogy that I've told my team where you had to play in the clouds and in the dirt and not in the middle. You can't get caught in the middle. So you either have to be highly strategic and look at the 50,000 foot view of where this industry is going to be headed and are we going in the right direction, or you have to really roll up your sleeves, get in the dirt, and start working. If you get caught in the middle, you're not doing either or, and nothing happens in the middle. So that's kind of the perspective that we have with our companies and our partners, which is we just keep working or look at it strategically.
Do you prefer to play in the clouds or play in the dirt?
I actually love the dirt. I love playing in the dirt. I just love getting things done. I'm a big fanatic on to-do lists. I have like these long to-do lists, and I just like aim to mark things off the list. And I think that's how I get a lot of things done. I've always been told I'm extremely efficient in what gets done. That said, the strategic landscape and looking at it from a 50,000 foot view is probably more fun to do with other people, to sit there and say, well, where do you think this industry is going to head? What happens to the grows in Pennsylvania when interstate commerce rolls out and California and Arizona are pumping most of the cannabis out? How do the hemp farmers get into this play? Can they even compete with quality cannabis? How does the illicit market play out? You're seeing in states like New York, for example, where decriminalization took effect, adult use or recreational hasn't kicked in, patient counts have stopped growing, and people are moving back to the illicit market because now they don't get criminalized for it, right? So the play of how legislation and regulation gets into effect of supply and demand and what people buy and sell, that to me is very fascinating. And we love seeing that. We love talking about it, as well as we love talking about the brands. So we are adamant followers of Headset and BDSA, more so Headset. It is a portfolio company of ours. We love the data that Headset provides, and we dish on it. We talk about it. We send emails around. We have internal meetings around it just to see how the brands are shaping up, how they're going up and down. Why is it that they're doing that? Is it a certain marketing thing that they have? Is it an endorsement they have? Or is it a new state they got into? Is it a price point that they're competing against? We like going to those states, seeing the products, trying the products and understanding like what is going on in the consumer's mindset when they walk into a store. We like meeting the people behind it. We love all of that stuff. You can tell how enthusiastic I am about the industry.
Right.
There's probably nothing in the industry that I dislike. It is a remarkable industry to be part of.
Well, that's I kind of feel the same way. Is that in this, because I actually come from the design engineering industry, so I was deep in the tech side as well. And coming over to cannabis, it's just like, man, everybody's cool here. Like where the tech side of the business is just, I mean, it's so not oversaturated, but like it's very cutthroat, where it's very collaborative in cannabis. And I don't know if you've noticed the same thing.
Absolutely. Especially on the operating side. There is some rivalry, call it, on the executive side at times that I do see, but on the operating side, I've noticed that there is a lot of co-opetition. So if you're working for a large MSO and you have an issue, but you have a friend in another MSO, you can freely call them up, give them your problem. They'll give you some advice. You're working together on it. And you do see from an HR perspective that there's people jumping into the different MSOs and single state operators all the time. Then they're moving ship, moving their families, going to different states, building things, getting them up to speed, moving to another state. So it is the same group of people. Mind you, they're much bigger than what you see in Canada just because of the population size. But it is extremely collaborative and great to see. That said, there are still some cowboys in the industry. Like with any risk, there are players out there that don't see it the way you and I probably see it. In Canada, those were prolific. They've mostly been jettisoned away. I think the same thing will happen in the US as the market matures more and you get in there. You'll see it professionalize more and become something that you can really relate to.
That view from the clouds, when do you see federal legalization in the United States?
My pick is federal legalization between 3 to 5 years, and interstate commerce between 5 to 10.
How does that change what you guys do from an operational level now?
So you have 3 to 5 years to get everything in order, be exactly who you want to be when federal legalization opens up. Because once that happens, there's going to be a flood of money in there. And the money goes towards the companies who have better, not reputation, but a better foundation than who the other ones are. You're even seeing that right now. The cannabis downturn that's been like the last year, a lot of the money's flowed to the top 5 MSOs relative to the other players in the industry. So that's kind of your view. Interstate commerce is probably the more the bigger risk for a lot of these companies. So if you're building cultivation or extraction in some of the more expensive states, you might get outperformed by companies developed in Arizona and California, where it's a much more drier climate. You can have some great cannabis in indoor or even outdoor. And how does that spread to other parts of the U.S.? And how do those facilities that house hundreds or thousands of employees in those states that are not as competitive, how do they fare out in interstate commerce? I think that is like the big day for cannabis, because you're going to actually see how supply and demand really rolls out nationally versus state by state.
As it rolls out state by state, what can operators or people that are looking to get into the business in states that have very little or no legalization do to get started? Or are they kind of just are they just in a waiting mode?
I mean, in some ways you are in a waiting mode because you're waiting for the politicians to really put things together and get into like a medical and then a recreational adult use regime. And that point in time, it's always important to contact your local lawmaker and try to not lobby, but vouch for legalization. The numbers tell the story. Polls are consistently showing favoritization of legalization for constituents in many states. So, and then the next step would be just to understand the rules. So the rules change all the time, whether it's a new state or an old state, relative to legalization. So it's always good to understand the rules. How can you play into it? If there's a social equity context, how can you apply for it? Do you need to partner with someone? What are the rules around ownership? It is a lot of hard work. I do find a lot of people want to get into it, but don't necessarily want to do the reading or the hard work to get into it. And that's the first step, understanding the rules. The second step is looking around to neighboring states and saying, how does competition in my state versus those neighboring states play into each other? So we noticed that in some states where they have a medical regime, the borders of it that might have an adult use regime, you see people driving across the border, picking up their cannabis, bringing it back. And so the pricing really matters between the states that are next to each other. And then the third phase would be to look at just how pricing has matured in more mature states. So you look at somewhere like California, which is probably the most mature out of any state that it's out there. It is considerably cheaper to buy cannabis in California than it is to buy it in Michigan. And then when you adjust for cost of living, that gap even widens more. I think our math work came out to be 40% difference between California and Michigan for a gram of cannabis.
Wow.
And then if you take that, if you say like, okay, like if we look at any limited license state or brand new state that's coming on board, and you see all these players that go out and say, I have EBITDA this and I have cash flow this. Well, what if we applied the pricing and the standard of living of California onto that state? How would those companies change? And a vast majority of them turn to the negative, because it's just very difficult to cultivate quality cannabis at those prices that you see in California, which is why it's difficult to make money in California relative to other states. And that's the viewpoint any operator needs to have, is someday I will be in California, and how can I cope with that?
Is RIV Capital focused primarily on the US right now and going forward, or is it still Canada and a little bit of Europe?
Fully US focused, like 100% of our focus on the US. We do help our portfolio companies that we still have, and they're located in Canada and the US, nothing in Europe anymore. But our, I don't know, 95, 98% of our focus is on the US market.
Do you have a personal connection to cannabis?
Absolutely. I mean, I've had a personal connection since high school. I never understood, and even to this day, I tell my wife, like when we're watching a basketball game or a hockey game, and I see like the Bud Light commercials happen, I'm like, kids are watching this. Like, how is it this is on? But like, you don't see a cannabis commercial coming on, even in social media. So it kind of irks me that the alcohol industry is so prolific and so accepted, and so many people die from alcohol, and you don't really see deaths from cannabis. So it's a not to say there's no risk to it. It is a vice, and with every vice, there is a negative component to it. And I think recent studies around cannabis dependence really shows that you might not get addicted to the properties in cannabis, but you can get addicted to smoking something to put you in a certain state every single day. And those things we need to really, as industry participants, even if it's not the best thing for my bottom line, you need to bring those up. You need to talk about those, because it's all part of the pains of growing this industry. At the end of the day, though, no matter how you look at it, as a society, this is a great investment for us to make. The medical components of what cannabis can do, as well as the recreational components of how it can displace alcohol, which is a very dangerous product. It's a fantastic investment for us to make as a society relative to what we've done to alcohol and prescription drugs.
Is your favorite product to use in your portfolio?
I love the product. So one of our portfolio companies right now is the Canadian arm of Gage. So it's called Noya. They brought cookies into Canada. I love trying out product from our portfolio companies and understanding their SKUs and what they do. That said, I'm not only tied to them. It's always good to try a new product, understand how others are thinking about the industry, talk to those producers as well. I'm a sucker for stories. So I like products that have a story behind it, whether it's through the marketing or through the people we know that created the product and why they chose the strain, what they did to it, how they grew it. All of that to me is very important. I'm not like that in the wine world, which is like a huge thing, like with connoisseurs. But in the cannabis world, just because you're in it day by day and you see all the players, it's just always nice to see how the product relates to who's talking about it and who's making it.
In your portfolio, is there one particular success story that you find particularly motivating?
So one of our There's many. I'm trying to think of which one to talk about. Probably the most successful one would be TerraSend, which we got into in 2017. They were a Canadian producer located in Mississauga, which is a suburb of Toronto. Medical only, switched to recreational when legalization happened. And in middle of 2018, the founders of that company came to us and said that they were looking to move to the US market, restructure the company, restructure the ownership, restructure the shares. And their tenacity and their persistence and their ability to push all the noise of, this was like right after Canadian legalization when stocks were up, and they said, no, data showing the US market, let's go to it before anybody else does. And they've created a multi-billion-dollar company since then. That to me is a fantastic story for anybody in this industry to just get away from the noise, get away from what everyone else is saying. Look at the data, look at where the puck is headed. I know it's a Canadian term, but Wayne Gretzky came up with it. Look where it's headed and focus on that. And I've only been in this industry for 4 years, but I've seen time and time again where market participants, the capital markets, have got it completely wrong. Whether it was extraction technologies in 2019 to Canadian legalized LPs and how they could go into the US the next day in 2018 to 2020 when nobody was really paying attention to the MSOs. So these things, you need to really step away from the capital markets, come up with your own thesis, look at the data, look at what people are doing around you, and come up with your own thought of where this thing is headed. And chances are you'll be more right than people who probably don't even touch the product, but invest in it and complain about the capital markets all day.
You mentioned that you have a little bit of news to share soon. Do you know when that might be?
So don't want to put anybody in a spot that they're not comfortable with, but in our last press release for our Q3 earnings, we did mention that we want to make an announcement before the fiscal year end. Our fiscal year end ends in about 16 days. So somewhere within that period of time, we're hoping to make an announcement.
Excellent. Well, before we get out of here, is there anything else that we might have missed or that you want to make sure the Cannabis Equipment News audience knows about RIV Capital?
No, I think this was a fantastic discussion. Probably some of the best questions I've heard for a long period of time. So just truly blessed to be in this industry, truly blessed to be part of this podcast as well. And looking forward to seeing how things play out. Excellent.
Well, Narbé, thank you very much for joining me today. I really do appreciate it.
Thank you.
All right, before we get out of here, please make sure to like, share, and subscribe to the podcast. You could also help us out a lot by leaving the podcast a positive review, or again, sharing the podcast with a coworker or friend. Finally, if you want to reach the podcast, you can reach me at david@cannabisequipmentnews.com. All right, from Narbé Alexandrian, President and CEO of RIV Capital, I'm David Manti. This is the Cannabis Equipment News Podcast, and we'll see you next week.
Thank you for listening to the Cannabis Equipment News Podcast.